Thank you for tuning in. Our next presenter is Brent Charlton, President and CEO of EnWave Corporation. Mr. Charlton, you may begin.
Thanks so much, and good morning to everyone who is connected to listen to the corporate presentation today. To start off, for those who don't know EnWave well, we are the global leader in vacuum microwave dehydration technology, which applies aptly into the food and cannabis industries, and we are pursuing applications commercially in the pharmaceutical industry as well. Now, before I continue to provide more detail on the current status of our business, I want everyone to acknowledge the disclaimer. I will be providing some forward-looking statements during this presentation, so I implore everyone to review our risk factors in our publicly filed documents. Our mission is to disrupt the global food and cannabis industries by becoming the most sought-after drying solution. When compared to the incumbent technologies, primarily freeze drying and air drying, our vacuum microwave technology, which we refer to as radiant energy vacuum, offers some significant competitive advantages. And when we compare our vacuum microwave technology to other companies who are trying to develop commercially viable vacuum microwave platforms, we are by far the most scalable and reliable technology in the market. We also offer continuous machinery that is covered by 17 active patents filed in multiple international jurisdictions to protect the innovations that our partners leverage for commercial benefit. We're publicly traded, as most of you all know, being this is an investor conference on the TSX Venture with about 100 million common shares outstanding, 124 million fully diluted. And currently today we're trading the low $1.20 per share, equating to an approximate 130 million market cap. We currently have 3 analysts covering our stock, including Steve Hansen from Raymond James, Kyle McPhee from Cormark, and Neil Winsdale from Industrial Alliance. We know where about 60% of our common shares lie through a number of high net worth investors that have been supporting the company for quite some time, as well as institutional holdings internationally. We also figure that approximately 30% of our shares are held through 3 European countries, Germany, Belgium, and the Netherlands. So we do have a strong shareholder base currently in that region of the world. So a little bit more about the technology itself. We're able to create a extremely controllable, low temperature, fast process to remove water uniformly or homogeneously from organic materials. And when I refer to organic materials, that being plant materials or protein materials, etc., creating end products with final moisture content that is flexible. And by implementing a lower temperature process, we can also retain some key characteristics in food products, meaning colors and flavors and nutrient levels. And in the case of cannabis, certainly the THC and CBD retention, the cannabinoids, but also more recently, we've developed a process that optimizes the retention of total terpenes within that particular material, which is really a breakthrough in the industry. For food applications, as I mentioned, that controllable low temperature uniform drying allows for the production of high value, innovative snack and ingredient products that simply can't be replicated using other platforms. Further, REV has the ability to convert lower value materials, B, C grade produce as an example, into shelf stable premium products. So materials that would otherwise be perishable or thrown away can be converted by agricultural companies into saleable product that can be sold for a premium, which is an advantage of the adoption of tech in this particular area. And we've successfully commercialized REV with over 30 food companies, and food has always been an integral part of EnWave's business as we've evolved. We began pursuing cannabis drying opportunities in late 2018 and through 2019. And successfully attracted several notable Canadian companies, as well as groups in Australia, New Zealand, Switzerland, etc., and a hemp company in Tennessee. We always knew that we could dry the plant material faster than any alternative while preserving, again, 100% of the cannabinoids. But I mentioned this terpene max process that we publicly disclosed via a news release. We feel that this is a game changer for the applicability of our tech in the space. And we filed a patent to protect specifically this particular process, which should put us in good stead to grow our business in this industry through 2021 and beyond. What was integral through the development of the terpene max process was that we obtained third-party certificates of analysis, clearly demonstrating the quantitative data, and what we disclosed is a 9% increase in total terpene retention versus the traditional rack or room dry. So REV clearly offers some commercial advantages, and we're monetizing those advantages through a diversified strategy. Our principal focus as a business is to continue to sign royalty-bearing licenses with food and cannabis companies and collect royalties tied to their commercial success based on either the throughputs of the materials on the machines that they purchase from us or as a percentage of wholesale revenue generated. In total, we have 42 licenses currently that are active. And our second revenue stream comes in the form, as I mentioned, we sell the machinery. So we're not giving away these platforms for free. The pricing ranges from about $230K all the way up to north of $2 million for the larger continuous lines. And through efficiencies that we've gained this past year, we've actually been able to improve our gross margin on the sales of these machines when in times past it had been more of a tighter margin structure. The third revenue stream will be generated through a new toll manufacturing service that we've dubbed RevWorks. This will be built out of our Delta headquarter facilities, and it's targeted for startup in the spring of this year. I'll go into the details and the reasoning of why we've added this to the diverse revenue generating model in a few slides here. And then lastly, the final monetization of REV is generated by our wholly owned operating subsidiary, NUTRADRIED Food Company, which, as many of you know, sells the brand Moon Cheese, a dried cheese snack in the North American market. It's done very well for us, and we now have an independent management team running that business that reports back into our executive management and board. Here's a snapshot of the revenue that's been generated in the three established streams that we have and how that improved greatly from 2018 to 2019 and then pulled back in 2020. Part of that clearly is to do with the challenges presented by COVID. Other challenges were tied primarily to the lack of international travel opportunities to complete some of the purchase orders that we had received in a timely fashion. We've overcome now both of those challenges and are very optimistic and bullish about 2021 and 2022 moving forward. So I'll now summarize the royalty generation and machine sales part of our business. As I mentioned, we have over 40 licensed royalty partners spanning 20 countries and 5 continents, so we're not reliant on a specific continent's economy. We are quite diversified and will continue to diversify the royalty generating opportunities for our business moving forward. In our portfolio, we have licensees that include Fortune 500 companies all the way down to 5-person operations that are more entrepreneurial, that are launching new products to market, trying to prove out certain business cases. So we hope to add this year additionally some meaningful, notable, I would say, household names, as well as, again, continued addition of these smaller ventures, which in the plant-based snacking space are willing to take more risk to, again, prove out different product opportunities that we can then leverage with the larger players down the line. We also envision this year multiple repeat purchase orders of machinery from these partners, some of which are reaching their capacity limitations on what they have, which is a good sign, meaning that the market is building for their product applications of choice. So as I mentioned, despite a challenging year in 2020, we were able to sign an additional 10 royalty-bearing commercial licenses in the fiscal year, representing a 24% increase in total licenses to date. So I'm speaking to what we had accomplished prior to the September 30th fiscal year end, as we're just through Q1 of our fiscal 2021. We also signed 6 new evaluation agreements, which also generate modest revenue payments for rental on machinery and payment for process and product development with prospects. We sold 11 10-kilowatt entry-level units, which we view as seeds that hopefully will grow into the larger, more impactful continuous lines. And we also sold a large-scale machine earlier in the year to a company in Peru. And just an update on that, we just recently completed the commissioning, actually sending our personnel to Peru this past month throughout the Christmas holiday season, and also completed the outstanding installation in Costa Rica for another large line. So that should help build our royalty base. To combat the travel restrictions created by COVID, we developed a remote installation program to commission multiple 10-kilowatt units. So fiscal 2020, we installed an additional 13 10 kilowatts and 2 large-scale machines being at TGOD and Milne for, again, commercial production and royalty generation. I'll move on to a summary of the NUTRADRIED business and where we stand to date. So NUTRADRIED was originally started as a proof of concept to validate REV at commercial scale and to be used as a sales tool to compel leads to also become future royalty partners. That's clearly now evolved into a growing snack company that I mentioned is being managed by an experienced team that we put in place just over 2 years ago. We've seen revenues grow significantly since that time. In 2019, and obviously a bit of a pullback this past year, tied to less rotations in Costco than we had the year prior, which is quite impactful to financial performance, as well as challenge with getting meetings at new grocers to secure distribution points to sell more moon cheese. So that has really turned in the second half of 2020 and now into fiscal 2021, where we have a number of decision points coming from large-scale grocers such as Walmart, Kroger, et cetera, within the next 2 months, as well as clarity from Costco in the near term in terms of what opportunities lie for NUTRADRIED ahead this year. So since NUTRADRIED was started, on a 10 kilowatt unit back in 2013 and gradually scaled up now to having 2 100 kilowatt lines working quite consistently, I think the biggest feather in the cap of the team there is their ability to secure premium distribution opportunities in multiple channels. So we mentioned the business and the impactful nature of the Costco relationship, but also securing the nationwide Starbucks distribution, distributions companies such as Whole Foods, a great presence on Amazon online, and we've seen that grow significantly through the past fiscal year. But moving forward into fiscal 21, the strategic focus really is for NUTRADRIED to secure meaningful retail grocery penetration, which, if successful, combined with some club success, should push the company back to positive EBITDA for this fiscal year. So we're looking forward to seeing the results of the hard work and the meetings that have taken place over the past few months within the Q2 fiscal 21, which will give us a clear understanding of performance or expected performance for the rest of the year. Okay, quickly moving to RevWorks. So as I mentioned, this is a new endeavor for our business to provide tolling service to companies that are prospective commercial licensees, but perhaps need to de-risk the business opportunity before investing into their own internal capabilities. We envision RevWorks as a tool to remove these potential commercialization roadblocks and encourage many more companies to adopt REV-derived products into their portfolio. If they don't purchase equipment themselves, by proving out product viability, we can then take those business cases and try to sell them to other companies in different regions and leverage those successes. It also will reduce any CapEx necessary for companies to produce meaningful quantities of product. And, you know, in certain cases, we've had companies walk away because it's just perceived to be too risky of a proposition if it's a new innovative application, and this will alleviate that clearly. So RevWorks will also hopefully increase the speed to market for REV-dried products. So quickly after the evaluation process that takes place between our team and typically the food science and marketing groups of our counterparts, they can get quantities that are adequate for medium-scale market trials, again, without that massive investment up front, which reduces their financial risk, which is the second point. It's also going to allow, like I mentioned, more innovative products to hit the market because of those applications being more risky and not as justifiable when millions of dollars are needed to establish a processing line. And the fourth and fifth points, it also will reduce the operational burden for our customers of RevWorks, allowing them to focus on what they're good at, you know, the branding and typical case marketing sales of products within their category of expertise. And lastly, we have the capabilities of growing quickly with the demand of our customer base with RevWorks. We have a 60 kilowatt and three actually 10 kilowatt machines that are slated to turn on by March of 2021. We're so far on time and on budget, which is good. We have budgeted $2 million investment to complete the facility and put the machinery in place. And right now we have a very full pipeline of prospective lead customers. Obviously, you can't disclose the names of those until the ink dries on certain contracts, but we're confident that we'll be able to allocate a significant portion of that capacity within this fiscal year. So a bit more on the terpene max and our developments in the cannabis space. So we were successful in fiscal 20 in obtaining our Health Canada R&D license, and we completed the facility that will allow companies to bring raw materials in to test our process and then take that material away for analytical testing as a third party. This was a key weapon that we did not have a year ago. And as we know through our experience with our partners, it was painstaking trying to get data out of the big companies, to be frank. And so we knew that we needed to generate it ourselves. So that's what we were doing. And a result of that is, again, the recent Terpene Max process we've developed and obtaining the third-party certificates of analysis from our own work. And collaboration primarily with TGOD. So credit to TGOD for really stepping up and sharing the necessary data that we needed to prove out that, again, our technology is appropriate for all applications in the space, not just product deemed for extraction purposes. We feel that we can produce a premium flower for combustible use, and we are now sharing more and more data as it's generated with our prospects. And again, we're ambitious about how that's going to grow for us in the coming year. So currently, we offer a very flexible drying solution for cannabis. We offer our Terpene Max program, which is a bit of a longer process because it's a lower temperature and a little bit more controlled, which maximizes the terpene, again, retention, quality of aroma and aesthetics. And then we have two other programs. One is a far faster process, under an hour, 45 minutes. The plant material will be meant for extract. And the last is a bioburden redux program where we allow the temperatures to go a little bit higher to ensure that they're killing any potential for mold growth. And again, that would primarily be associated with plant material that is going to be used for extraction purposes. So a bit of an update on our tech in the pharmaceutical industry. We haven't really pushed this as a main growth driver for the business in the capital markets, but it's worthwhile noting that our relationship with GAIA LYOPHIL, which is one of the largest sellers of pharmaceutical-grade lyophilizers or freeze dryers globally, purchased their own machine this year to place at their facility in Germany to act as a showcase to hopefully sell more machines. The arrangement with GAIA is that they will act as our business development arm in that industry and bring us leads. We'll work collaboratively to complete projects. We'll share in spoils of the machine revenue. And also, we've agreed to share in an undisclosed structure any future carried interest royalties being generated from that space. We feel and felt that this would be the fastest path to monetization of our tech in pharma without having to put up millions and millions of dollars of investment and bringing in the expertise needed to better design pharmaceutical GMP scalable machinery. Also, we'll note that our project ongoing with Merck is active and hoping to get an update to the market sometime later this year based on what they're working on and publicly disclosed. They are working on several vaccinations to be dried using our tech to eliminate the need for cold chain storage on a go-forward basis. So just to wrap up the presentation before I address some of the questions, which I'll go through one by one, is the reasons to own EnWave. I would state now, having been through the height of the COVID panic and shutdown in economies and international travel through fiscal 2020, we've come out on the right side in that our pipeline is full. We performed well in Q1 until 2021 and expect that to continue. The quick and decisive expense reductions that we made in our business, about 30% at the parent company, has led to us realizing that we can continue to operate in this lean fashion while still being able to deliver on multiple large-scale orders simultaneously through outsourcing to some of our service providers. So that, as well as the fact that we are still by far the global leader in vacuum microwave technology with clear advantages in multiple industries. We've got a proven track record of closing deals with companies of all shapes and sizes. We have a diverse commercialization strategy. Went through the 4 different revenue-generating streams that we hope to grow this year. And ultimately, the future for us, I think, is incredibly bright over the next 2 years based on the growth prospects in the cannabis industry and also many of these food verticals which are starting to gain traction. So on that note, I won't speak to the appendix, which basically summarizes our board of directors, quality, and our executive management. I'll move to the Q&A. So the first question that's being asked has to do with Tilray. In our recent MD&A and past disclosures, we had identified that the project with Tilray had stalled, and that had taken place for a couple reasons, not all of which I can disclose as some of it is confidential, but what I can share is that the 2 machines that they had purchased were not GMP machines. One of the facilities that was tabbed for one of the machines in Portugal required GMP machinery. So that was never disclosed to EnWave. They made that purchase order decision, and that was a mistake. So they sat on the machinery. The benefits of entering the deal with Tilray originally was to provide confidence to other companies in the cannabis space to try our technology. And to be frank, at that time, we had no operating history with cannabis. It was a lot of R&D at the pilot plant, but certainly there was no refinement to where we are today, where we actually have the weaponry to go out and sell REV with confidence in the space. The machines have been taken back from Tilray. We negotiated a price that was advantageous to us, and we will be placing one of the 60 kilowatts at our RevWorks facility. So the cost of that machine is well below what it would have cost us to build a new machine for that capability. And yes, the second 60 kilowatt potentially will be going to NuWave, which has also been publicly disclosed recently, assuming that they fulfill their purchase order requirements by the end of February for the production of shelf-stable baked goods. So that's the first question. Second, is this presentation still on your site? Yes, absolutely, it is. EnWave.net is our website, so please visit and or contact myself or our executive management if you have further questions. I answered the question about Merck, so hopefully some updates later this year on what's going on. And in terms of, there's another question about healthy snacking, and that's really an area of focus for us. Our business development team has been incredibly active pursuing plant-based snacking companies or plant-based companies in general that can convert the raw materials that they've developed into a snack form. So I can't say too much more on that, but I'm confident there's going to be more to come in the very near term with some pretty unique plant-based snack applications that, I think will intrigue many. Next question, any plans to uplist in the U.S., either the OTC, QB, or QX, or even NASDAQ? In the future, potentially the NASDAQ, likely not on the OTC, QB, or QX at this time. And of course, our pursuit of graduating to the big board TSX is also within our line of sight. We want to be sure that we establish consistent profitability in both businesses, EnWave and NUTRADRIED, or at least have some definitive timing on that before we make those moves to increase the cost structure, which comes with uplisting. So last question, what are one or two things investors should look for in 2021? So from my perspective, I think massive growth in the cannabis industry based on our recent data capture and process development and entry into the U.S. in a more robust manner. Thank you, my American friends, for creating a Senate that is more likely to pass the legalization of cannabis broadly in the United States. So we're looking forward to leveraging that opportunity. And also the second thing would be the launch of RevWorks. So bringing on some very large name companies to leverage that tool to allow them to get product to market, to justify their business cases, to hopefully give them confidence in deploying CapEx to bring in the processing internally. So that is all for the questions that I see on the Q&A portion. So I'll pass it back to the operator. I want to thank everyone for dialing in to listen to this presentation. And again, any questions, always feel free to contact me directly via email or through our website. Thanks so much.
And that concludes this webcast. Thank you.